Welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Monday, July 26, 2010. It's 11:30 a.m. Eastern Daylight Time in the U.S. It's 4:30 p.m. in London. In Bermuda, it's 12:30 p.m. and in Mexico City, 10:30. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. We're not going to cover this in any detail, but in Duisburg, Germany, 18 people, of course, were killed yesterday at a rock concert. Apparently they were all caught in some tunnel and a stampede ensued. In our world, Tropical Storm Bonnie fortunately did very little damage. The storm blew over the Gulf Coast and over the area where the BP oil spill is being dealt with sustained winds of only about 40 miles per hour. Heavy rain did fall in the region, but no major damage was reported. The flotilla of 200 and some odd ships are heading back to the area. On the left now, you see here the relief well drilling ship has returned back to the area and is now in the process of dropping down piping some 1 mile to hit the ocean floor and then hopefully reconnect again using those robot submarines to the wellhead down there to continue to work on the relief well. So everything has been set back about 2 weeks. There was no leakage, however. Meanwhile, in Iowa, millions of dollars of damage has been caused as dozens of homes and businesses were flooded out after a failure of the Lake Delhi Dam. The Lake Delhi Dam in eastern Iowa failed Saturday as rising floodwater from the Maquoketa River cut a 30-foot wide hole in it. Areas below the dam, including Monticello and Hopkinton, were evacuated. The river crested upstream of the dam at Manchester, Iowa, early Saturday at about 25 feet, more than 10 feet above flood stage. About 50 homes and 20 businesses had major flood damage, and the city's sewer plant ended up being flooded, and that was shut down. In Taiwan, the private refiner Formosa Petrochemical Corporation shut its remaining Seoul refining complex in Mailelo. This is after a fire broke out there yesterday. The accident is expected to have a significant impact on the regional oil market, as the company is one of Asia's largest gasoline exporters. But the actual impact on the supply-demand balance is still difficult because they don't know how long the shutdown will last. The 80,000 barrel a day number 2 plant remains on fire as we speak. The refinery complex is now fully shut down. The fire is under control, but they're burning out the heavy oil. There were no injuries or accidents. In Iran, in Karg Island, high pressure in the central boiler of a petrochemical factory led to an explosion that killed 4 people. This is at Iran's largest oil terminal on Karg Island in the Arabian Gulf. The blast occurred yesterday. It was under control. Iran is OPEC's second largest oil exporter, producing about 4 million barrels a day. Well, it was interesting. On Saturday, I was driving, and I had the BBC World Service on, and I was listening to them report on a study that had been released by the German Institute for Economic Research. The acronym in German is DIW. And I listened to it and I thought to myself, boy, the insurance industry is going to be pretty mad when they hear about this. Leading members of the marine insurance industry have reacted angrily to suggestions that the insurance market has a vested interest in piracy continuing. As reported in the Insurance Day today, a research paper published by the German Institute for Economic Research claims that Somali piracy will remain a problem because key players like the insurance industries have an interest in its existence, providing, of course, that violence does not escalate and premiums increase. The report adds the insurance industry receives an extra $400 million annually for covering vessels traveling through the region. Neil Roberts, who's with the Lloyd's Market Association, said, "I don't think anybody welcomes piracy, and to say insurers make profit with little loss is inflammatory. There's lots of competition in the market, and ship owners are doing very well out of the competition." Roberts questioned the authority of some of the contributors to the German report. He said a lot of the people they've talked to are not in the public domain. His view was shared by the chief underwriting officer at Aegis, David Johnson. He called the report bizarre. He said their assumption that we have a key interest in piracy continuing is strange. Their conclusions are not commensurate with the exposure or the premiums we receive. We insure something like 15,000 to 20,000 transits through the region each year, and the total premium we receive wouldn't cover one total loss. We're taking a considerable risk. The report claimed that the ransom itself is only 1/5 of the total cost involved from a successful hijack. This has prompted particular criticism from the insurance industry. Both Roberts and Johnson questioned the accuracy of that, as they say that the ransoms make up about half the total cost. Even in Germany itself, the insurer's umbrella organization, GDV, has issued a comment. They said that this study on piracy in Somalia is non-scientific, untrustworthy, and unacceptable. Good for them. We'll go to a word from our sponsors and come back with the rest of the news. Guy Carpenter, the reinsurance broker, has filed a suit in an effort to recoup brokerage fees after they claim clients followed an employee of theirs to Lockton Re. According to a report from Goldberg Segala, based upon the allegations contained in the complaint, it appears that an employee of John B. Collins Associates, which Carpenter acquired, it's a subsidiary of Carpenter, left Collins for Lockton Re. Following his departure, it says, a number of clients that had placed reinsurance cover through Carpenter left the company for Lockton Re. According to the complaint, Carpenter did not receive all the brokerage fees owed based upon the procurement of reinsurance coverage and is seeking recovery based claims of conversion, tortious interference with contract, and unjust enrichment. Lockton said, "We disagree with the assertions made in this commercial dispute and will respond appropriately through the courts." Australian insurer QBE saw its share price fall by more than 5% in Australia today after it revealed a first-half net profit down 40% year-on-year. The decline was attributed to, quote, substantially lower net investment income, which fell to $144 million from $558 million in the same period last year. Those are all in U.S. dollars, and that is a substantially lower amount. It was all not bad news. Gross written premiums were up 20% to about $7 billion. In local currency terms, Australia generated the best growth, up 26% of their operations. European operations grew slowest, up by just 5%. Their North America group recorded 13% premium growth. Their combined ratio went up a little bit from 89.3 to 89.7%. Profit on insurance activities was up 7% to $820 million. That's not a bad report. City AM in London is reporting that Brit Insurance will announce on Wednesday that it has made a pre-tax profit of £48 million in the 6 months to June, compared with a £9 million loss in the same period last year. Brit shares closed at 910 pence on Friday. Analysts believe Brit shares at 910 on Friday will fall back to about 800 pence if Apollo, the private equity stalker, abandons its pursuit. JLT is making news. They've expanded its international network in Europe by linking with 3 European brokers. They've also bought a 20% stake in one of them, the Greco Group. They've entered into a trading agreement with SIACI Saint Honoré, GRECO Group, and Ecclesia Group. The 20% shareholding in Greco cost about 17.6 million euros.